I'm Melinda Elmer, and thank you for watching my video blog. I'm with Keller Williams, and today I have with me Nick Cowan of Wholesale Capital Corporation, and he's going to give you some contact information in case you have questions later on.
I'm Nick Cowan at Wholesale Capital Corporation. I'm a direct lender. My phone number is 951-488-3180 or 714-642-3557.
So today we're going to answer some questions about purchasing a home and what the loan process is like. So Nick, how does someone know how much house they can afford?
Well, when you're buying a home, mortgage lenders, we just don't look at your income or assets or the down payment that we have. We look at the liabilities, your debt obligations, your auto loans, your credit cards, your child support, potential property taxes, fire insurance, your overall credit rating. So we go through this process to determine what you can qualify up to and basically afford. And if your credit isn't high enough, we can also help with that too.
What is the difference, Nick, between a fixed rate loan and an adjustable rate loan?
Well, fixed rate mortgage is the interest rate is set when you take on a loan. And it will not change over the life of the loan. With an adjustable rate mortgage, it's also known as an ARM, the interest rate may go up or down. And many ARMs will start with a lower interest rate than fixed rate mortgages.
So Nick, how is an index and a margin used in an adjustable rate mortgage?
So when you get an ARM, two main factors determine the rate that you pay: the index and the margin. The index is a rate that's set by the market, which usually follows a LIBOR. The index adjusts with the economy's ups and downs. The margin is a fixed basically rate. It's agreed upon the bank, which is added to the index to determine your actual rate.
Nick, how does someone know which type of mortgage is best for them?
So we're talking about the biggest financial decision of your life. So I usually have clients ask themselves a few questions. How long you plan to live in the house? Where do you see yourself in 5 years or 10 years, which will determine whether we decide or fit within a fixed rate loan or an adjustable rate loan. Do you have or want to make any home improvements? Do you want to keep cash on hand for other investments? What's the really financial risk? And do you want to be debt free? And so these are the common decisions or questions that are asked to decide on the type of mortgage loan that we seem that would fit your best the needs of yourself.
So now, what would a mortgage payment include for a buyer?
Mortgage and payment includes, you'll hear this a lot, it's called a PITI, and what that is principal, your interest, your taxes, and your insurances. Now the principal is the payment that you're paying on the amount that's borrowed. The interest is repayment to the lender for the amount that's borrowed. The taxes are the property taxes on the property, and then the insurance is the payment for the fire insurance, and that's once again is acronym is PITI, which you'll hear a lot in financial transactions for a mortgage loan.
Now, how much cash does someone need to purchase a home?
Well, for this, it all comes down to your home price, the market area loan limits, the type of loan that's used for financing. For instance, I'll just go over a couple. We have a VA loan, requires no down payment. A conventional loan, you can get away with as minimum as 3% down. FHA loan, you can get away with 3.5% down as a minimum down payment. There's also a rural loan called the USDA that has no down payment. And then for the payments that require down payments, there's also grant programs that are available that you have to fit within the criteria.
What would be the smallest down payment for some of those grant programs?
0, 100%. So there's actually, for the FHA program, there's a platinum program that you can use, but there's income restrictions on it, and there's debt ratio restrictions also, your debt to what your income is.
So for the most part, people generally speaking should have 3 to 3.5% down minimum, unless they're able to use a VA, and
Correct.
They have to account for that.
Yes, yes.
How long does the mortgage process take?
Industry standard is usually 30 days. Myself, I have an average turn time of 21 days or sooner, but it takes a team of people. It takes everybody involved. In saying that, during the loan process, your application is going to pass through about 20 hands of professionals, at least, at the minimum. And then with so many people handling your transactions, easy for processing to get backlogged. So you got to remember, your file must be checked by the processing team. We have an underwriting team. We have a settlement team. There's also escrow. There's title. There's the sellers. There's agents. There's transaction coordinators. There's an appraiser, and then any issues that arise during that process. So it's a lot to coordinate. So the best advice I can give is be patient as you can. You got to remember that everything that I'm asking for or requesting is to help speed the process of closing your loan.
As of August 1st this year, I know we have some big changes coming up. How long will the mortgage process take after August 1st?
Well, now what's going to go in effect is when we have loan docs, there's going to be a time period that we have to wait till you actually can sign. So that may push out our normal 30-day process to possibly another 10 business days. So once everything's finalized and you can sign your loan docs and we're going towards the funding and closing time period, there's going to be time requirements now that you're going to have to wait to actually sign your loan docs. You're going to have like a breathing room of 3 days before you can actually physically sign your loan docs and those loan docs be accepted. So I would say that it's probably going to jump up a longer time period than the normal industry standard of 30 days.
It's probably closer to 45 days after August 1st would be the quickest closing. What is the difference between a pre-approval and a pre-qualification?
Well, I kind of, with this, I think the best way to describe this is before a recession, and I get a lot of this because a lot of people have purchased homes before, but before the recession happened, mortgage approvals were like ice cream flavors from Baskin-Robbins, and there's numerous amounts, and it's easy to get. Before you just needed a heartbeat Social Security number and you can get a loan. But in the last 7 to 8 years, it's been significantly restricted. In general, somebody that pre-approves you, what's going to happen is you're going to get your credit run, your actual credit run. I'm going to verify your income and assets. And then when somebody pre-qualifies you, it's just a discussion. We're going to discuss the credit. We're going to discuss your income. We're going to discuss your assets. So that's the major difference since the agents and sellers view an actual pre-approval as more of a firm start to the home buying process, it's best to get pre-approved.
Absolutely. It's a lot stronger for a buyer when they're purchasing a home as well. Now, what is the difference between an interest rate and an APR?
Interest rate is your fixed rate, your note rate. The APR is something that you can use as a consumer because I'm going to send an estimate, and when I do qualify you, you can use that to bounce off and see the other lenders or other estimates. It's the cost that are associated with it. The APR you can use, once again, the note rate, you have the note rate, whatever the rate is, and then the annual percentage rate is with all the fees included. And so it's a shopping tool.
What are the closing costs generally?
Closing costs are associated with the transaction of all the entities that are involved that I discussed previously. The fees are roughly around 3% of the transaction or the purchase price, and then those are all associated with the transaction of all the parties involved.
Okay, great. And how much do those generally run?
Around 3%. They generally run around 3% of the purchase price.
How do someone figure out how much equity they have in a home, or if they should refinance, or if they have other options available?
There's a lot of tools out there. I know a lot of people use Zillow and stuff like that online, but the best to get the closest accurate information would be to call your realtor or discuss it with myself as the lender. We could look up the closest comps that closed around you, the recent comparable sales that closed around you, to assist you with that, to tell you what your assets are or how much equity you may have in the property or how much it has increased over the time that you purchased your property.
Great. And absolutely, we're always happy to provide that information to help them go over their options for sure. Now, what is the best advice that you have for a new home buyer?
For a new home buyer, I think it's to budget. I think is the best thing is to coordinate and sit down and figure out what you can truly afford. Myself, I look at black and white. I see what your income is. We use your net income. I don't know your personal spending habits. So I would say a budget is the best thing to start with for you to really set yourself up to be successful and not live for your home or live for your mortgage payment. And I would say that would probably be the best advice, is to start with a budget. And then, call us. We're here to help. We're here to assist you with that biggest decision of your life, and help you along the way to make that purchase.
And remember, if you have questions for either of us, you can reach us. My number is 562-316-2915, or you can reach me at email at melinda.elmer@gmail.com. And you can reach Nick.
Phone number is 714-642-3557, 714-642-3557. Or you can email me at ncowan@wccloans.com. That's ncowan, NCOWAN, @WCCLOANS.com.
Perfect. Thanks so much for watching. Have a great day.